Welcome to The Hard Truth. I'm here with Mr. Andrew Hines.
Here's me doing things the hard way. I was the value add guy, renovating everything I did, putting in hours. Like, I'd look at my projects and they'd take 8 months, 8 to 10 months sometimes. I'm like, how much bandwidth do I have? That's no way to scale. When I saw how bad the lockdowns got in Canada, I was like, I'm done with Canada. And that's when I made the decision to start selling my student rentals. I felt very exposed with those. We have a pretty big market expand. We do Facebook, we do cold calling. We're spending almost 20 grand a month now, US, driving leads and buying land and houses across the state of Florida mostly, and now into Texas.
The next kind of hard truth is in regards to a new investor. Somebody who's brand new, just getting started. Maybe they own their house, maybe they don't. What do they need to know?
But I don't think you can be an intermediate investor and be that successful anymore. So I feel like you need to either get under a really good mentor and copy what they're doing and lean on them for help, or go be a passive investor.
Welcome to The Hard Truth. I'm here with Mr. Andrew Hines. It's an absolute honor to have Andrew on. I've been a guest on his show multiple times, met many incredible investors. So great to have Andrew on, and looking forward to diving into a little bit of US investing, hospitality, and just some great sound business advice for investors and entrepreneurs who are looking to scale and grow. So, Andrew, tell the viewers a little bit about yourself, about your real estate, past experience, what you're doing.
Yeah, I mean, how deep do you want me to go? Just a little?
Start at the beginning.
Yeah. Okay, so 2011 was my first purchases in real estate. 2010, I met my now wife's mother, who was doing real estate investing and sort of was my inspiration to get into mortgage brokering briefly, and kind of learn the biz. So I learned the biz, bought a bunch of properties, got tapped out of money, got into the US in 2012, buying some really rundown properties in Ohio, got burned bad, came back to London where I'd started, and got into student rentals and doing heavy renos, adding additions. That led me into contracting, which I never thought I would do. Started building houses and developments for other people. More recently, I've gotten into hospitality investing. We have a couple of resorts up north in Tobermory, Ontario, and Miller Lake, which is right near Tobermory. And then also US. So I think now if people who follow me these days would know me more as like the glamping and US investor guy. But there's a lot that happened before that.
Yeah.
It's been a lot of pivots and kind of adjusting to what the market's done and what's changed. Of course, I had the podcast in there that I hosted for 5.5 years. We did over 1 million downloads. I think we ended around 1.1, 1.2 million downloads. And now I have REI Hot Seat, which is a deal analysis show. We talk about commercial multifamily, and really just I have a panel of realtors who specialize in that, and we just dissect deals. So that's kind of what I've been up to.
So not much.
Not much.
Not a lot. So no, that's unbelievable. And I think what you've accomplished in 12 to 13 years, I guess, is more than most people dream of in a lifetime. Why the strategies that you're doing? So you've literally done it all. I think it's fair to say you've pretty well done it all.
Done a lot of stuff, and it was like just necessity, really. Like, I didn't want to build my own student rentals or rebuild them, but I knew that I didn't know enough to not get burned hiring a general contractor, and I had been burned. So I was like, okay, guess I'm doing this myself. And so I GC'd, and that led me down that path. So it was a lot of just necessity. As I said, it wasn't that I wanted to do that. It was that I acknowledged my weaknesses and inexperience, and realized that was at the time before real estate podcasts were so plentiful.
Yeah.
Gonna break some stuff here, and I'm gonna have to figure it out.
Okay.
And then it was really around the time that like the market went crazy, 2016, 2017, and the prices in London really started going nuts. Like, I used to be able to buy that 1,900 square foot bungalow for 200, 205, and then I could do my thing. And my business partner and I, who we would basically flip them in a company. We would buy them, build them out, sell them turnkey to an investor, and these were like cash flowing student rentals. And that worked really well for a while. But then as soon as the market sort of exploded with inflation of prices, it was like, I'm not gonna risk that. Like, I'm not gonna risk these higher price points to make the same money. And I sort of slowed down at that point. And so I had accumulated some for myself, and I did like a duplex conversion, and I kind of just sat in a holding pattern, wondering if the market was going to normalize, wondering if things were going to stabilize. And I'm like, okay, that's enough of this. We ended up buying the camp in 2020, I believe it was, and or 2021. Yeah, it was 2021. And then we bought Neptune's 2023, which is the cottage resort, and that was sort of the, okay, we're going to take a different angle on this. Not going to go with residential real estate, get away from the landlord-tenant stuff because all the concerns around that, and let's go to commercial. My plan really was going back into when I saw how bad the lockdowns got in Canada. I was like, I'm done with Canada. And that's when I made the decision to start selling my student rentals. I felt very exposed with those because they were very purpose-built to be student rentals. And I was sitting on the sidelines and the camp opportunity came up, and I'm like, okay, commercial real estate in Canada, I don't need to be fully gone. I'll do that. So, but I started putting the pieces in motion to be in the US back in 2020, 2021. Started building new houses down in Cape Coral, Florida. And you get the vibe. I just kind of do it sometimes. If I just need to do something, I just do it. So I built new houses, built 3 of those, sold them. I had 10 lots. We sold off the difference because then margins got squeezed in new construction when this whole downfall happened with interest rates going up.
Well, and it's like you're doing a lot of different things, but what I really like is the prevailing message that you have here, which is you're really analyzing. Mm-hmm. You're really looking at things, and you're not just driving forward blindly. You're stopping and saying, oh, I got 10 lots, I was going to build them. I built 3, and I crunched the numbers going forward and made a strategic investment decision based on risk. And we're seeing a lot of people who are getting fixated on completing something and not analyzing that. And it's interesting. Because I remember when you and your business partner, Mike, were selling off the student rentals. And at the time, I was thinking, well, the market's going so crazy. Why are they selling it so early? Like, it felt like you were selling too early. Mm. But in hindsight, like, you were really sold it at the right time. What?
Yeah, I could have waited a little longer, but I sold like what I had left in 2021 mostly. And then 2022 is when it all fell apart, right? So yeah, I'd say I did get out at a decent time. Not the absolute best, but I'm definitely grateful for that. And to your point, yeah, I mean, I am looking at it analytically. I think I probably am, one of my faults is maybe to be an overthinker. So yeah, I've probably overthought a few things, and that, doing the camp was out of my comfort zone because I knew that it was going to be work. I knew it was going to be hard, new uncharted territory. But there's only so long you can sit on the sidelines and wait for things to get normal.
Yeah.
Because I don't know that that's ever going to happen. But further to that point, I really had to look at what were my skills and what were my weaknesses and what's the market going to do? And realistically, how am I going to create wealth for myself knowing where the market is now? Because that's all we can ever do. And so this is when I actually made the decision to learn how to buy off market. For the longest time, in 2020, I took a stab. 2019, I did some off market mailings. I got my phone blowed up. I got like 200, 300 calls from a flyer campaign I did in Hamilton. I think I spent, several $1,000s. And I'm like, it works, but I couldn't handle the leads. I wasn't skilled at closing them. And I was fascinated. I'd bring people on my podcast and I'd ask them about it, and I'd try and learn, like, how do you close people? But I loved the idea, because here's me doing things the hard way. I was the value add guy, renovating everything I did, putting in hours. Like, I'd look at my projects and they'd take 8 months, 8 to 10 months sometimes. I'm like, how much bandwidth do I have? They take so much of my time. That's no way to scale. So I knew that I needed to learn how to make money on the buy. And that was sort of the graduation that happened over the last 2 years, is as I saw margins get squeezed in Cape Coral, and I'm the build guy, I was raising the money and building these houses, hiring a builder, and there was money in them. I made a bit, but not enough to justify continuing, especially with margins getting squeezed and squeezed. I'm like, okay, the only solution is make money on the buy. And that's sort of my mentality at this point is it's either gonna be a turnkey deal where I can basically come in and from day one, we're going to cash flow with a full down payment, or we're going to be making a bunch of money on the buy. And so that's what we do in Florida now. We're into Texas as well. My business partner and I, Matt Piche.
Yeah.
So he was, we both had places we stayed at in Naples, Florida, kids are around the same age. We were just kind of like hanging out in Naples, and I was telling him what I was doing. He's like, well, why don't we do that together? And that was sort of how it started. I'm like, why do you want to do this together? But anyways, it's actually worked out to be really great because I think we have complementary skill sets and we really push each other. So yeah, we have a pretty big marketing spend. We do Facebook, we do cold calling, and we're spending almost 20 grand a month now US driving leads and buying land and houses across the state of Florida mostly, and now into Texas.
It's super cool. I will say it was a surprising partnership. I didn't know you guys knew each other well, but
he's been on my podcast 5 times. So 4 times he came on. We did like a yearly thing.
Yeah.
And then I'm like, we never even came across it, but we just kind of became friends in that time.
Yeah. So the business down there. So you guys are. I'd love to know because I'm watching the highlight reel on social media, but haven't had a chance to really dive in. Is it a wholesale, a wholetail?
It's a wholetail.
It's a wholetail business.
Mostly, yeah, as much as we can be.
And what's a wholetail? What's a wholetail? What is the model now?
Well, it means we'll close on the properties, but we're not looking to do the renovations. We're not looking to be the value add guys. We're looking to be the guys that spent the money and had the skills to get the property under value, and then we just go to the market at just under retail value.
So you're buying at 50 cents on the dollar?
Yeah, for the land, usually 50 cents.
And selling at 90 to try to move quick?
Yeah.
You're not trying to squeeze every dollar, velocity of capital.
Right. We want to move them. It's been a funny time, and like we have a lot. Somehow we just get a lot of land up near Gainesville. Like in that area, we've had probably our most success up there.
Okay.
And it's been a little slow this year in turning some of that inventory. So yeah, Matt and I are both very willing to be aggressive on the price discounts to just move stuff.
Yeah.
And because we don't want to sit on it. We want to turn the money, do it again, turn the money, do it again. And never sit on, like take your profit when you can, right? Like if you know you've got profit there, take it, because you never know what the future holds, right? And that's the biggest thing with getting the land at 50 cents is land is not a necessity like a house is. I mean, some people think of it as that, but you can't just move into land, whereas you can a house. So we have to get the land cheaper, so that we have that flexibility. If things are a little slower, we can just drop the price down and move it.
I think we see too many people who put themselves in the bucket, but I'm a buy and hold investor.
Mm-hmm.
I will say I'm a buy and hold investor, but everything's for sale.
Yeah.
My strategy is to buy real estate that I can hold on to, but it's for sale.
Right.
So you guys have, and I know Matt was Mr. Buy and Hold.
Yeah.
Mr. Single Family.
Boring real estate.
Mr. Boring Real Estate, and he's now pivoted into.
He was always a flipper, though.
Right. Okay.
So Matt's been like such a go-getter for so many years, right? He always had his buy and hold, built that portfolio, and was still flipping 6 to 10 properties a year on top of that.
Right.
And I would always question, I'm like, how the hell do you have time to do all this? I was fascinated. So, seeing a lot of his systems that he's brought into what we do is great. I'm a buy and hold guy. I just look at this as there needs to be an active strategy there somewhere. So this is my active strategy, but certainly a part of our plan is to build out the keepers too. And we're always looking, right? If the right property comes across, we'll certainly keep it.
Yeah.
Just right now, we're stabilizing this business and we're turning it into something that is mostly automated. The machine that runs and we just sort of oversee. And that's the goal. We brought in a pretty big team of people to support us. And it's crazy. Would not have ever got to this point without Matt and what we've been able to do together. But we've got acquisition managers that work for us. They're commissioned. They make a piece of the profit. We've got a project manager that handles properties that need renovations. And then we've got my assistant who sort of helps out 50% of the time just on the US business and kind of everything in between. It's a legit organization. So we're building the business, but the idea is that business is something that we'll be able to run without our oversight. Well, not without our complete oversight. We should be able to create a little separation over time. And then of course, add in the passive piece, add in the cash flowing properties to keep.
Well, and you nailed it. And this is where we're seeing a lot of people who are, they're failing right now because they don't have any active income strategy. This whole, I'm going to be a full-time real estate investor.
It's not practical.
And cash flow duplexes.
Yeah.
It's not happening.
It was 10 years ago you could do it easily. Yeah. Now it's a lot harder. Yeah.
You need an active strategy to generate cash.
Yeah.
And that's what you guys have created here.
Right, take the pressure off. And I did that even back when we were flipping, and Mike and I were flipping those houses in London. I didn't want to sell everything. So getting into contracting and building, it was like related. I was talking to the same people I talked to do my flips and to do my renovations. But it allowed me to not have to sell every property to make my active income.
Yep.
Because I'm not really the guy that's going to go take a T4 job. Like I've been in business for myself since 2010. That's not about to change.
You're pretty unemployable. Yeah.
Kind of unemployable. I don't know. Like I can't even imagine how I would do that at this point. But
Yeah.
Happy to consult and work for people. I do some coaching and this and that. But on my own terms, of course.
Cool. So definitely wanted to dip into the U.S. stuff. Let's kind of pivot back to the Grotto getaway. So talk to me about what attracted you to that business, what it is, what it's going, because you guys are buying tarps and making a lot of money.
Yeah, tarps, tents. Okay, so that whole thing started because Jake and I, my brother-in-law, were talking about how Airbnbs are great, but they're not scalable. And this was like coming out of the summer of like the lockdowns when Airbnbs in Ontario went nuts. And we were hearing stories of people making $800 a night, $1,200 a night. I'm like, whoa, okay, that sounds cool. But I've done the reno game. I know what it's like to buy one house and renovate it for 8 months. Like that is such a slow game. It's not scalable, not at a rapid pace anyway. But what if we could get a place where we could just add? And like the concept of glamping came up. I'd seen the reels, and we were kind of just talking. And I just said, well, wouldn't it be awesome if we could find a place where we could do like glamping, or a place where we could, like a camp or something, that where we could just scale up our number of units and offer an experience. And like the next week, Jake brings me this listing for a campground, and I'm like, are we really going to do this? And it was just going to be me and him. And then we're like, well, I said, I think we need Mike. So we call Mike, and then Mike's like, well, it's got to be with Zach. Yeah. So then that's how the four of us ended up doing this together, and we did another one, which is Neptune's, which is nearby, his cottage resort. And the idea was scalable. It was scalable. So we have 70 bylaw approved sites on the actual campground, and the first summer we went in, we started with 2 tents, and we had a bunch of regular camping too. So we had the regular camping plus 2 glamping tents. Those glamping tents did very well the first season. Probably by 2 months into the season, we launched like another 5 tents. So we finished that first season with 7. We scaled up another several tents the year after, and then we just had another 3 this year. Plus we added trailers as we were going too. So if we could find trailers, we have about 13 or 14 fully serviced sites for trailers, meaning they also have this septic component. If you're not including septic, we probably have like 50 sites that are.
Is that transient as well?
Yeah, they were traditionally seasonal campers. Okay. So they were backed into place. And they were set there for a long period of time. We actually had to break the news to 25 seasonal campers that we couldn't have them there anymore. So those sites cleared up. We actually bought several of their trailers from them, kind of renovated them, made them look nice, and rented them out. And ultimately, long story short, what we were able to do is turn a lot of our sites, from things that would earn a couple grand in a year to sites that earned 20 grand plus in a year, each site. And we see the potential now, kind of like as we've been in this industry and networked, to get our revenue per night up a huge amount by just continuing to add to the experience. And what we've set our sights on is like, let's give a trailer its own hot tub. Let's add a centralized sauna to the site, because right now, like our better trailers can do 250, 300 a night. What if we could turn that into 400 a night, by offering more, full outdoor patio set, like making it more like the cottage than it is a trailer. And, maybe throw a tiny home onto that site where it's like, you're not sacrificing anything. You've got a full-size shower, a beautiful unit, like a hotel room surrounded by woods.
Yeah.
So that's sort of the next stage of our expansion is we can expand. We're 30 sites occupied for our glamping business out of 70. So we got lots of room to grow.
Yeah.
But there's already so much more we can do by just improving the sites we have, giving them the amenities that they don't yet have. Because starting off, we've been the grill and chill campsite. We don't have any amenities.
Right, the grill and chill, I love that.
We're right in the middle of everything, right between Lion's Head, right between the grotto for like those beautiful, it looks like turquoise water, kind of looks like the grotto in Italy, or Greece, right? Europe, we'll call it.
Yeah.
Anyways, so we know we have a great location. That's been our angle. But now it's about going to the next level. So we're actually doing an equity raise on that to take it to the next level. And if people are watching this, it is for accredited investors only. But if that is something you're interested in, we actually have a website for it now. It's grottoinvest.com. If you want to check that out for more details.
Love it. And that's so that means they can actually be like an owner or an equity holder in this.
Yeah. So basically, people could get involved and it's very passive. Like there's a whole class of shares created that's priority, and it gets a preferred return. And you're an owner in the site. You're in it with us. And
I love that you tied in that component as well, because this is what I really love about. I have the Kiwi Motel, and this is what I love about this business is I can get an exponential return by driving the business, by putting more into the business. When you do an apartment building, for example, you're kind of capped at the market rents. Like even if you turn the building over, it's still worth what the rents are, and you're kind of done. This gives you mentioned some of your partners, they're go-getters, they're hustlers, they want to improve. This gives you guys an opportunity to drive exponential return by being creative, by being innovative, by being strategic with your investments and analyzing the deal. And that's one thing that attracts me to that hospitality world and this resort world, is there's an opportunity for exponential return for people who are willing to be, I don't want to say outside of the box, but attentive to their business. So
yeah, it's attentive to the business, and then also willing, having the balls to do it. I think is a big part of it, right? Like, because there's plenty of people who will kind of get in, and hey, we all have our struggles at some point where it's like, oh, is now the time to spend? Is now the time to go to the next level? And to your point, like you can't go halfway with it. Like halfway will get you so much, and I think for us where we're at, we're kind of like, we're that step above camping. Like you can come and you can stay in a canvas tent for $200 a night, and it's got a queen bed in it, it's super comfortable, it's very peaceful. But how many nights are you going to do that when you don't have Wi-Fi, you don't have anything to plug your phone in? It's a great experience. Don't get me wrong. You should absolutely book now. grottogetaway.com. Definitely book your stay for next summer. Because you'll get a chance to see everything, and it's you'll get lots of Instagram-worthy content.
So it sounds like you need to book your 1 or 2 night glamping stay, and then extend to a trailer.
Yeah.
For a longer. Yeah. For when you need to plug your phone in, right?
Yeah, when you need to plug your phone in. Well, we have stuff. We have an office where you can go get a coffee, plug your phone in, and all that stuff. So we make it like an incredible experience. It's just, my thought is, let's go to the next level. Like let's make it so you're not sacrificing to go stay at a campground. Like one of the big things I think, because I know for me it would bother me, is like for a shower. We have fantastic showers for like the camp bathroom. But I know people will pay more to have their own full-size shower and bathroom in their own unit. So, getting into models where you're not sacrificing in any way. Now we can take the stay from being like a 2 to 3 night on average to like, you can stay 5. You can watch your Netflix. You can, sit in the hot tub. Like you can just make it a true getaway, like awesome experience.
How, you mentioned bylaw approved sites.
Yeah.
So one thing that I see key about the commercial space, you talked about investing in Canada, lockdowns, restrictions. The nice thing about commercial assets like this.
No Airbnb control.
There's no Airbnb control. You're approved to rent. Neighbors don't have say.
They tried.
They tried,
and we had to tell them like to read their own bylaw.
Yeah.
And then, you have anything else you want to talk about? And then they went away.
We didn't talk about this in advance. I'm just curious, think about it. Is there any ability to do like treehouse rentals? Have you looked at that?
Yeah, okay, so it's coming from the contractor background and like living in that world, absolutely, like the engineer would have to design the whole thing, and it would have to be So in our zoning, no, because the zoning won't allow for it.
Okay.
But say we did it on our other site, which is C3 resort zoning, that you just have to be building code approved. So assuming we could get an engineer to say it's structurally sound, we could build it to building code and make it work.
Cool.
Now, there's a lot to figure out, but I've questioned this a ton because I'll see these people, they have this stuff. I'm like, that's not code. That's not code. How are you doing this? And I'm wondering if they just did it.
There's probably a lot of that, right? Yeah. So, and that's the answer for the folks that are trying to be serious investors like you guys and raise capital. You're doing it the right way. You're not just going to slap some 2x4s in a tree and say, hey guys, $300 a night.
There's a time and place for that, but I've never been that type of investor because it's like you have to evaluate what's my payback on what I'm going to invest into this thing that I have no idea how long I'm going to be able to run it.
Right.
Right. It's one thing if you got a 5-bed and you squeezed in a 6th by throwing up an extra wall, but it's a whole other thing if your business depends on that continuing to run and you get shut down at year 1, year 2. Then you're just wasting money. So we loved that it had 70 sites. We saw this huge glamping expansion model. And the biggest, I would say, challenge in execution of that is obviously manpower, woman power, like getting the help. And we spent years building out our team up there.
So I'm going to ask you 2 hard truths, and the one is going to be very specific.
Yeah.
What is, because as a mortgage broker and mortgage agent, I'm in the STR space. I get a ton of calls for people looking to get into the resort space, resort world. What is the hard truth about switching from buying traditional real estate investments to running a business like a resort?
You can't be passive. You can't be novice. Like your skill set is going to be called upon. And if you're inexperienced, you might not know how to roll with the punches. If you've never faced adversity, if you've just listened to some really great real estate podcasts and
Hard Truth with Kyle, Andrew Hines, yeah.
and you've found a way to make it work with single family rentals or multifamilies, you may not be ready to deal with what's going to be thrown at you running a resort. Like you're managing people, like it's a full out organization, and you have to now expect that. Like any good business, the average business in Ontario, average business in Canada, you're 3 years to attain profitability because that's just normal. And one of the things, like we thought we could skip that curve because we know what we're doing and it's Airbnb, it's different. Yeah, it's different, but there's also the operational efficiencies that only time cures. Like you have to learn what you're doing that's not perfect and then find where you can cut the fat, find how you can get better, you create systems. And doing it like we've done it, like a glamping facility, like we were sort of inventing the wheel. We didn't have anybody in Ontario we felt we could follow. So partly like we should have gone to like the glamping show back in like 2021 and we would have done things a little differently. So, there was a mistake. But the hard truth is it's a hard business. It's not a walk in the park. That's part of the reason we wanted a team of us because we each sort of handle a different part of the business. We step in when we're needed. And then we've had up to 10 employees at any given time. I think we hit 11 at one point. This year we hovered at 7 the whole year between our cleaners, our 2 managers, and then our assistant manager. And it takes a big team, and you got to manage people, deal with situations you don't really deal with as a real estate investor.
And I remember I talked to you guys about this in the beginning. Most of these resort areas are not going to be located in Burlington, in Toronto, and Kitchener. They're going to be in a more rural location.
Yeah.
So you're likely not going to be close to it, and there might not be as much staffing options as you would assume. You're in a rural location. There's less people there.
Yeah, we provide housing for our managers and for our assistant manager. So that's one thing we're able to do to attract people.
Right.
Like, with all the sites, we don't need all 70 right now.
Right.
So we have multiple employee accommodations.
Right.
And that's one thing that it's been a bit of a competitive advantage for us.
Right.
And
that's part of their compensation, I guess, or?
Yeah, I mean, it's part of their contract, and I'm sure it lubricates them to sign the contract and work for us.
Right. Okay. I love it. Mm-hmm. The next kind of hard truth is two hard truths. In regards to a new investor, somebody who's brand new, just getting started, maybe they own their house, maybe they don't. What do you want to tell this person as to, getting into real estate, whether it's Canada investing, whether it's US investing, what do they need to know?
Well, from my perspective, and you can tell me if you disagree, but I don't think you can be an intermediate investor and be that successful anymore. So I feel like you need to either get under a really good mentor and copy what they're doing and lean on them for help, or go be a passive investor. Like, decide what you're willing to put into it, because if you want to be like, I want to quit my job and I want to work real estate, okay, you can do that. Make sure you got a good savings, and then go work under the best. Like, go be a commercial appraiser, go work for Kyle. Like, do something like that where you learn the industry so that you're not inventing the wheel. Because if you're inventing the wheel, like, you're going to get murdered out there. You have
So true.
I made so many mistakes, but I made them at a time where, and at a dollar value where I could live with those mistakes. And yeah, it hurt. And I watched one of my houses in Ohio get totally destroyed. Property manager took my money to renovate the property and just lived off of it, collected all the rents from the tenants, lived off of it, never paid me a dime, allowed my house to get destroyed. And then I had to quit claim the house to him. Otherwise, I was going to have to pay the city to take it from me. So that, like...
You were robbed.
Yeah, I was just... And this guy acted like a victim as he just, like, abused me. And I had to learn that reality is out there. And thank God it happened on an asset that I had maybe $30,000 into in total, not an asset where I had hundreds of thousands of dollars into. And that taught me the lesson, okay? Like, you're going to get burned. If you give contractors deposits, especially new ones that you don't know, that have no reason not to screw you, they're going to screw you. They're going to take your money and run. If you work with, I'm not saying a contractor that came referred from your best friend and asks for a deposit, that's probably a little safer.
Yeah.
But there's a context. And even our mutual friend, Mike, he had one he needed to do in Buffalo. I'm like, Mike, don't give that contractor a deposit. He's like, I don't have any other option. I'm like, Mike, you give him the deposit, that's gone. You gave him a deposit, it was gone. But
it's wild. It's wild.
But it's so predictable. Like, and you only really know it once you've experienced it. Now, Mike won't ever do that again, right? Like, so I say you only know it if you've experienced it, but you'll also know it if you work with somebody who teaches you the way and they help you avoid those. So you can work with a coach, or you go apprentice or protege, be the protege of somebody who's an excellent person in their field and relevant to real estate. So I've seen this all along. Like, real estate investors are in related fields. They're either contractors, they're appraisers, they're mortgage brokers, they're realtors, and these guys get into real estate because they already know the industry. They know what goes on. They see some of the hiccups, and they're prepared. So I think that's probably the best way.
And we didn't script this at all, but your answer is the same thing I feel like I say to people every single day. Mm-hmm. If you're looking to get into real estate, get a job in real estate.
Yeah.
Like, get a job in real estate so you can earn money,
yeah,
and then put some money in some passive investments.
Yeah. Passive is the way to start, right? If you're not going to quit, or you don't want to do a new career,
yeah,
do passive.
And the great thing that's happened in your grotto getaway, CapCap, my fund, you can get in at a low entry now. Mm-hmm. These passive investments weren't necessarily available at the lower entries that they are now. Yeah. So you can participate in high level projects with a little bit of money while you learn the industry and learn the ropes, stack savings, and get into a position where now you're an expert in your field, yeah, and you can more confidently and competently take on bigger projects. Yeah. Because there really has become a separation. 5 years ago, it was easier to get in with a duplex and start slow, and the reality is it's tough. It's
because how good are your numbers going to work? I mean, you can still do that. It depends. Like, how much do you want to scale? But if you're just going to go buy and renovate a duplex for like $200,000 on the reno, and I don't know what you're buying it in Hamilton for now, probably like $800,000. Yep. So you're in for $1 million, and what's your cash flow going to be? It's probably going to be marginally positive. It's not huge. That's a very slow play. And for some people that works, but do you want to go through all that headache, or do you want to just like invest in equity? There's so many funds out there, or people that are doing equity raises. Like, if you find one that's the correct flavor for you, that fits with your belief systems and what type of real estate you like, that might be a better solution.
I love it. Same kind of question for the person who is maybe at 5 properties, 5 deals. Maybe they have left their previous position and they're going all in on real estate. What's a reality for them? What's a hard truth? What's advice for that person?
So you said they got 5 properties and they already work in real estate?
Maybe they're working in real estate. Maybe they've done a big refi, so they're sitting on some cash. They've left their desk job that they hate. You know, they're trying to go all in on real estate.
Yeah, I mean, it would be more or less what I recently did, and that's like do a critical analysis of yourself. What are you good at? What are you not? What do you realistically see yourself creating wealth with? Because let's face it, the reason we're in this is because we want to create way better wealth than the average Canadian is going to have. And so evaluate that. What is it you're trying to accomplish? And once you understand that, figure out the best way. Like, it's okay if the answer to your question is something you're not good at, because there's probably something you are good at. And now you can basically take that thing that you're good at, go team up with somebody else who has a complementary skill set, and don't try and do it all on your own. Because for the longest time, I tried to lone wolf things, and it's not wise. Like, go work with somebody that it's going to be a partnership that you're both gonna. It's not going to be 1 + 1 = 2. It's going to be 1 + 1 = 10.
And every single partnership that I've seen you get into surprised me at first, and then I realized, like, I've seen the light. I'm like, I get it now. Like, I thought, well, you know, these guys can independently do this on their own. Why are they sharing the equity? And now it's so clear to me. Like, it's 1 + 1 = 10. 1 + 1 + 1 = 100.
Yeah.
Like.
Well, it's like Matt's pure push on the US stuff. Like, Matt's pure push, and I'm like the conservative. Like, okay, let's work through every possible way we could get burned here. Like, I'm that guy, and not that he doesn't do it. He does that too, but that's more my like mentality. And I think the two of us, like, we've definitely avoided deals that we would have regretted because of that. And we've also, I think, given each other the confidence to push the pedal down.
Love it.
And I love that he's pushed me, like, times where I'm like, maybe we should take the pedal, you know, take the foot off the gas a little bit. It's like, no, we hammer that down.
I love it. I love it.
Yeah.
That is, you know, your wealth of knowledge, Andrew. You've been around. You've done this a long time, and I think you've shared a lot of valuable insights with the viewers today. I appreciate you very much.
Yeah, thanks for having me.
Coming on, and make sure we link the Grotto Getaway, Grotto Invest. Make sure we set that up so you guys can connect with Andrew and check it out. I know the project well, and I think they're a great group of operators. So thanks again, Andrew.
Appreciate it.